Hi, this is Dave, and welcome to the weekly market recap. We are closing out the week for Friday, April the 5th, 2013, and I'm recording this video on Sunday, right around noontime, just after lunch, on the Sunday, the 7th of April. So let's start out with the Dow futures, as we usually do. So we're looking at the Dow futures on the daily chart. And there's, really not a lot to report today or for this week, except for the fact that, we're still going higher in the Dow. But we had a decent little pullback here on Friday. So this was closing out the week on Friday. And then it was interesting to see that it closed, almost, not right at its highs, but it closed, way off of the lows. And the other interesting point to note was that this was, this is a kind of pullback that you want to see in a normal market environment. It came right back, right down to the 21 period exponential moving average, and it came down to this trend line here. So that's a nice, this is the kind of buying opportunity that I'm usually looking for if I want to get long in a swing trade. Now, that being said, I'm not that interested in taking longs on swing trades in this market, just because we're so, we're so high. But if I wanted to get on this market, if I wanted to get long, almost any market on a swing trade, this is the kind of pullback that I would be looking for potentially. And then what you do is, you can, what I usually do is I just drill down to a lower time frame chart, and I look for a reversal on a lower time frame chart where maybe it puts in a higher low and a higher high. So I look at the market structure there, let's say on a 15-minute chart. And then I can see, okay, it looks like the market's reversing off of this level on the 15-minute chart. And then, you get long, you can place a stop, or that's what I usually do. I'll place a stop below the low and, see if it'll continue higher. So that being said, I did recognize that we had a decent pullback on Friday, but I'm not really interested in getting long in the stock indices at this point in time. So let's take a look at the S&P futures. So the S&P futures, kind of the same story here. You had this sort of pullback to this trend line here. It didn't quite hit the trend line, but this was a decent pullback, and it closed pretty significantly off the lows. So we have a lot of divergences and a lot of these momentum indicators. So as long as we hold for example, this trend line and the corresponding trend line in the other stock indices, their corresponding trend line, then I believe that the market is still, bullish for the most part. So, as long as we hold that trend line. So we'll see into next week if we're going to hold, some of these trend lines as well. And then let's take a look at the NASDAQ, and then we'll look at the transport. So here's the NASDAQ futures. Okay, so the NASDAQ futures were a little bit weaker here. And you can see we were sort of setting up this sort of triangle here. We pushed to the high side, and then we pushed to the low side. You can look at it as a triangle. You can also look at it as, a sideways consolidation in this sort of box right here. And you can see we just came down to these lows, and we closed about 50% off of these lows, but we broke this trend line. So as long as we're below this trend line, I'm not really liking the NASDAQ too much. So if the market is going to roll over from here, and I'm not saying that it is, but if it is, then, this would be the first sort of sign that you'd be looking for, a decisive break of an established trend line. So this this is sort of a cautionary red flag for all of the indices. It looks like we sort of put in a double top. And then we broke this trend line here. So what I'd be looking for next in terms of this is I'd be looking for, if we break this and then we sort of come back and then come back through this level, that would put me on the bear side of this market. At this point in time, this looks like a first break of this trend line, but we could always come back up into that area and close above these highs. So this is a sign of weakness, but it's not really that, telling. Let's take a look at the transports. So the transports, did the same sort of scenario here where they pulled back to this sort of established trend line right here, and they probed through them, and then they closed right up at their highs, right in and around this area here, right at the highs of this candle. So this is, as far as I'm concerned, this wasn't really a break of this trend line because we didn't close below the trend line, but we'll be keeping an eye on this as well. And then what we want to see, it looks like we put in a minor lower high here. We want to see if we're going to hold this trend line and then push off and get above, this swing point high. We need to get back above this swing point high, to really get back on the bull side. So, or above the 20 period moving average, the 21 exponential moving average, or above this swing point high. But at this point in time, we're still holding support. Okay, so we've still got support down here, and as long as we're holding support, we're still on the bullish side of the transports. So let's jump into some other key markets here and look at the dollar index, DX. So the dollar index is just sort of consolidating. It's just putting in a basing pattern here, and you can see we keep testing these key levels in and around 82.35, 82.50. 82.35, 82.50, and we did close, we tested both of the levels, but we did close above, let me just change this to a green pen because we're still on the bullish side of this. We did close above 82.50. So at this point in time, I'm still cautiously bullish on the US dollar index. It's starting to look a little bit like it's struggling here, or it's putting in a sideways consolidation, but as long as it holds above 82.50 on a closing basis, I am still net bullish, this market. So we'll see what happens, what transpires next week. Let's jump over to the euro futures. So the euro futures are right back in $1.30. So tell me these aren't key levels in these markets. 82.50 on the dollar index and $1.30 in the euro. We broke the level here. We came down into some support levels here, and then we're right back, and we closed right at the line in the sand right at $1.30. So tell me $1.30 is not a key level. So those are really the inflection points in these markets. The euro $1.30, dollar index 82.50. We'll need to see how we act around those levels, and if we're going to get any type of trend change around those levels. So a little bit of a cautionary note here for the dollar index is you've got this sort of downtrend line here, and if I just extend it forward, that's probably where it lines up. It looks like it broke that downtrend line. So we want to see at this point in time, as long as $1.30, we're closing above $1.30 consistently, then I'm still, bearish on the euro. But I am noting that we did, break this downtrend line. So we'll just kind of have to see how we act around that, and if we're going to hold these lows at around $1.2767, somewhere in and around there, $1.2760 if we hold those lows. So we're sort of it looks like we're sort of ending like into a choppy period of time here in the dollar index and in the euro, and we'll just need some real clear guidance off of those levels, decisive closes off of those levels, either below them or above them. So that's all I really have in the dollar index and the euro. Let's jump over to some commodities and see how they're behaving. Let's start off with gold. So gold had a we had this sort of pattern setting up here where gold looked like it was getting on the bullish side, and then it came down and broke this low at about 1555 ish. And then if you notice here, I haven't talked about this level in a while, but this was, if you go back a number of videos, this level right in around 1539, 1540 was a key level. This has been on the charts. If you go back in the videos, this level's been on the charts for weeks and weeks, and you can see we came almost to the tick right into this key. I think we called it weekly support. That's where that level was derived. We came into key weekly support here. We held that level, and then we bounced pretty hard to close off the week right into the 8-period exponential moving average. So these levels here, you can see this was a key level, and this key level played out in terms of the initial test of support. It was a level that was, I believe, determined on the weekly chart. So if we look at some of the other indications like the stochastics, I mean, the trending indicator is still net down. The stochastics were short-term oversold. And now what you want to see is you've got a crossover of the slow stochastic, percentage K over percentage D. And what it looks like it's happening here is we put in a short-term bottom, at least from a stochastic point of view and from a longer-term support point of view in the gold. And it looks like we might be, you want to see this roll back above 20 and come back up to the high side. And then eventually you want to see it break, this 21 exponential moving average here. So at this point in time, it looks like we found, short-term support there. We bounced hard, but you really need to see something get going above this trend line here and above the 21 exponential moving average to get back on the bullish side of gold. So, is it actionable at this point in time? I don't believe so. But these are some pretty key levels that were tested and that came into play. So let's look at the sister silver. And silver looks really weak here, but it looks like it found some intermediate support around this support level as well. This was a longer-term support level, 26.39. It didn't quite hit that, but we look like we have the same scenario playing out. You can see the stochastic here is really buried. You want to see it come back above this 20 line to get back on at least the intermediate or short-term bullish side. You want to see it come back up and around there, and then you've got falling resistance overhead, and you've got some pretty hard levels of resistance overhead here. This pen should actually be red, but that's kind of what's playing out for silver. Is it actionable at this point in time? Not really, but if I felt this was a long-term support level that we were going to hold, I'd be possibly looking to get long here with a stop below this low or a stop below this support. Am I interested in doing that? Not really. But I think that could be a good, sort of bottom picking trade. I don't like to usually try and pick bottoms, but that's the kind of trade that I would be looking at once this crossed above the 20 period, or the 20 line rather, on the stochastic, if I believe that this was, going to hold this level. My personal opinion, I think it is, but I'm not really interested in trading it. So at this point in time, it's just interesting. Let's take a look at the crude oil. So the crude oil has been, I'm looking for signs of strength in the crude oil, but it's putting in some patterns that look like, we might be finding support in around here, but it's been acting really weak. So we put in some nice support here off of this trend line. We put in a lower high, and then we came back and we're just retesting this lower high. So at this point in time, this is support. This is support, but what you really want to see is it start, pushing off, put in maybe a W pattern here on the fast stochastic, hold the 0 line here on the MACD, have this push back to the high side off of this support level, or a retest of this support level and start pushing up. Major resistance is still $100 to $101. So is it actionable here? Not really. It's a little bit sloppy, but this is kind of what I'm looking for. I think according to Don Vialu's work, I believe we're heading into some seasonal strength in oil, and we'll actually get into that in the latter part of this video, seasonal trade that I'm looking at, and then we'll analyze it from a chart pattern perspective and some ways that we can sort of use pattern analysis along with some other techniques like seasonality. So that's one of the things I'm looking at. And then if we look at natural gas, so natural gas is looking really strong here. We've been talking about it since it broke this trend line. We were really interested in it when it broke. So let's see, we were. This was an area that we felt more bullish than bearish on, but this was really the area that we felt, was tradable, a break above this swing point, and a retest of some of these levels. So that's still in play. However, having said that, we had a really strong day on Friday. We pulled back to the 20-period exponential moving average into this support level in and around 384, 385. We pushed off really hard, and it looks like we want to come in and test some of these higher areas. As far as I'm concerned, though, this trade is basically, this trade is basically done. I felt it was sort of done in and around here, and we're just kind of meandering up and down around that area, but you could have held on here a little bit longer. I didn't actually take this trade, but I looked at it setting up because I'm not really doing a lot of swing trading right now. But having said that, I have begun to. So, if we would have fast forwarded a couple weeks, I probably would have taken this trade. Now, I'll show you a trade that I am in, and we'll just sort of flip over to some of this other work that I'm working on. So this is I'm just sort of setting up my my watch list over here, and this is the so this is based on some of Don Vialou's work and his partner, his son John, and his other partner Brooke Thackeray. So this was a trade that was brought to my attention from Brooke's book and from some of Don's work. In Brooke's book, he talks about seasonal strength in the Canadian dollar going into April, from the beginning of April to the end of April. So I was in our trading room here. Sorry, I'm having a hard time talking today, but it is Sunday. So I was in our trading room here with one of our members, Gord, on when was it? Thursday? I believe it was Thursday. And I was talking to Gord about this potential seasonal trade taking place right in around this area, and the discussion was, well, technically it's triggered according to the rules where you are you're outperforming. Now this is relative strength outperforming versus the S&P 500, right? The SPX or the S&P 500. But if we actually look at this, and I just changed the secondary symbol that it is comparing to, and I changed this to performance versus the US dollar or the UUP ETF. Let me just do that for the Canadian dollar here. So you can see that it is outperforming the US dollar as well. The Canadian dollar is outperforming the US dollar. So you can see here there's outperformance relative to both the S&P and the US dollar, which I think is more of the comparison you want to look at for the Canadian dollar. So this is sort of how I'm combining Don, John, and Brooke's work with some of my own. So the discussion was, let me just jump back to the discussion point. The discussion was, well, you've got a signal in and around here, why not just take it? And I said, well, from a pattern analysis perspective, which is what I like to use trend lines, I like to use pattern analysis. You've got a nice defined trend line developing right in and around here, right? So we had that trend line developing, and when I saw on Friday that we had a pullback right into that trend line, right, where we had a test of this trend line, which it developed. So let me be clear on this. So this trend line here, this was sort of like the zero, and this was potentially a first test of this trend line, but you don't know that it's a trend line here until it breaks this swing point high. So once it broke the swing point right in around this point, and it went set to put in a higher high from a market structure perspective, here's point 0, here's point 1. I was able to draw a trend line and project it forward. And once I did that, and I could see here that we pulled back nicely into this trend line at point number, I'll call it point number 2. I'll call this point number 0, and I'll call this point number 1. So 0 is the low, 1 is the first potential higher low, and 2 is the the second test of this trend line. This is where I was interested in it, and then I decided, you know what, I'm going to start doing some more swing trades again. I've only been day trading. So what I did was I bought a small option position long in the Canadian dollar, which is being tracked by the ETF FXC. So the position I took was, I think I only bought 2 contracts, a really small pilot position, 2 contracts with a delta of 70, call option. So it's really hard to draw here with a mouse, but that was the position I took on Friday when we had this pullback in here. I marked it on my chart so we can review it going forward. The reason why I like this trade is because, number one, according to Brooke and Don's work and John's work, we're entering into seasonal strength in the Canadian dollar, seasonal strength into the end of April. So I'm only really looking to hold this into the end of April if it performs. So if I look over here on the FXC, I've been writing actually a program here to track some of this stuff and to signal me, to signal when these trades are setting up. So it's in season here. This is what it's telling me. It's in season. And, you know, the season ends on April the 30th, so it hasn't exceeded that date. So we're green light, green light. We are above the 20-period exponential moving average, which is what I use. Don uses a simple period moving average, but we are green light on that, and the relative strength is green light. And at some point, the stochastic was green light when it crossed over this 20 line back in here. But this was an early signal, you know, off of this low, and I needed to wait until, you know, here basically is where, you know, right in around this area here where everything was sort of firing together. So that's where this is where essentially I believe Don's signal fired, according to his methodology, right in here. You know, this had already taken place. I waited for it to do that and then to buy the pullback. So that's where I got interested, and that's where I took a small pilot position in here. The reason why I like this trade, even though we're below the 50-period moving average, we did find resistance at the 50 and we pulled back, but I believe we're going to push back through it. We're below the 200-period moving average, so you've got dynamic resistance here at the 200-period moving average. But ultimately, what I like is I like the fact that from, you know, we've got a high in place and we have a low in place here. So from a Fibonacci perspective, I like to use confluence. So from a Fibonacci perspective, we have a 50% retracement of this high to this low, which brings us right into this area. We have a 61.8% retracement in this area, and we have a trend line which is coming into play here from a pattern analysis perspective, right in almost in the middle, smack in the middle of that zone. So what I'm looking at here is taking along here. Ultimately, I can give it, you know, a break of this low, get out of the position, but I'll probably, you know, expect it to hold this level and push off. And then my risk reward, you know, with a stop below this low or a stop below this low, I've got a move to potential resistance up and around here. So that gives me, you know, at least a 2-to-1 risk to reward ratio, and probably more like a 3-to-1 or 4-to-1 risk to reward ratio. So I like the risk to reward ratio there, that we could move all the way into this resistance level, and I really like this trade. So you know, take a snapshot of that sort of setup in your mind. That's what I'm focusing on. That's what I'm doing. I'm in a small swing trade position there. And then let's take a look at oil, which we talked about earlier. So we looked at crude oil, but let's look at the OIL, which is in season right now. I don't have my, or I do have my date set up properly here. So if we look at the OIL, I apologize, this video is getting a little bit long, but these are, you know, some interesting topics that I wanted to share with the members, the various members and the group here. And oil entered into its beginning of seasonality. The seasonality ends, I guess, into the end of May. So at one point we were above the 20-period moving average, but we are no longer. So we're red light. The relative strength was on the close of Friday still, you know, we were on a relative basis versus the S&P 500. We were still green light here on the relative strength on a comparison basis. But if you look at this from a pattern analysis perspective, what I'm really looking at is I'm interested in this trade potentially, but you can see we're setting up this, you could either probably classify this pattern here denoted by this downtrend line and this uptrend line as an asymmetrical triangle or a wedge. I'd probably call it more a wedge. And you can see here, we've got immediate resistance overhead here. So where I'd probably be interested in this trade if it triggered from a pattern analysis perspective is we're potentially holding this trend line. So we could look at, okay, well, why don't we just take a trade here with a stop below, this swing point, which coincides with this trend line. Or where I'd really be interested on this trade is for it to get above resistance up and around here, to come back up and get above resistance here, and to show signs of strength and that we've broken the immediate resistance of this pattern here with a break of that trend line. So I'm still watching this trade. I may get interested in it if we get back above this swing point and above this trend line. So that's kind of how I'm combining pattern analysis with the the things that I've learned from Don and Brooke on seasonality. So that I wanted to share with the group. That's interesting. And then from a pattern analysis perspective, if we do get above there, then what I'd be looking at is using some of Thomas Bulkowski's work on pattern analysis, looking at a one of the measure rules for the break of this pattern, where we could potentially see a move measured from the distance from this high to this low, and projecting it from the breakout point, we could get a move somewhere all the way up and around there. And then recognizing we have resistance in crude oil around $100 to $101 a barrel. So there's a number of different ways that you can combine your work and things that you learned with other people's work. You can either just stick to their methodology or stick to your your understanding of the market as you've observed it and as you've learned it over time. Or you can combine multiple methodologies to look for those areas where things come together, those confluence areas. So that's what I like to do, and just thought I would share that work with everyone. That's all I've got this week. I believe we're getting probably pretty long in this video, so I'm going to wrap this video up. For those who are still listening to the end of this video, we have a upcoming CSTA Oakville chapter meeting on Wednesday. Let's see, that would be Wednesday, the April the 10th, from 7 to 9 p.m. at the Queen Elizabeth Community and Cultural Center in Oakville, 2302. Believe it's 2302 Bronte Road. No, 2302 Bridge Road. I'm sorry, Bridge Road. So I'll be sending out a notice to all the various groups. The CSTA notice went out on Friday, but I'll be sending a notice out with this video this weekend. So stay tuned for that. It's going to be an interesting meeting, and I hope this helps, and I'll look forward to seeing you at an upcoming meeting or at the next video update. Good trading. All the best.